Are you new to real estate, struggling in real estate, maybe a wholesaler or cash buyer, and you're looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet and I analyze it for a cash deal and a creative deal. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. This is the weekly deal analysis. Let's get into the show. Before we dive into this week's episode, if you would hit that like button for me and find somebody that might find some value in this also and share it with them. Let's dive in. This week we are jumping to Nebraska, 2325 Hanscom Boulevard in Omaha, 68105. They are asking $265,000. They had a price drop of $10,000. It's a four-bedroom, one and a half bath home, 18 and a half square feet, 1,850 square feet. No HOA, and it has been on the market for 202 days with only 8 favorites. So we're gonna analyze this thing and see if we can't make a good deal out of it. Let's start with out front here. Pretty decent. Everything looks clean. We got a little limb or something hanging off here. Roof looks good. Chimney looks good. Big tree out front. Sure provides a lot of nice shade. Looks like some attic access in here. Really nice front porch. Ooh, I like that. That's really pretty. I love built-ins. Great stonework. Not a big fan of the wallpaper. These registers are so cool looking. I like old houses if I haven't told you already. Tile countertops got to go for me personally, at least. Dated kitchen, for sure. Get rid of the wallpaper. Looks like we're missing a dishwasher here. Stove's already there. Where's the refrigerator? Did I not see a refrigerator? Or at least space for one? Oh, they got a little mini fridge. All right, well, it's a fridge, I guess. Basement, not really usable. Bath, bedroom. That is that's some pink right there. Looks like this wall is raw. That's a lot of pink. And a little bit of a safety hazard here. That won't pass an inspection or an appraisal. This drawer is messed up, full of wallpaper. We need a paint job. Basement, I wouldn't touch. Panel looks newer. Gas water heater. Deck needs some work. All these window screens need to be replaced. Things kind of beat up. I'm not really surprised why it's still sitting here. We got a little water damage in here. Missing some boards up here. We have fairly medium renovation. Like they pulled off some vines off of the back of the neighbor's house here. All right. I think we've seen all we can see there. Let's see what the agent's telling us here. Not telling us anything. All right, what else we got? So almost 40% of this market are renters. Median age 36. A little over 25% are college grads. Interesting. Average household income. Good to know if you're a landlord. What else we got here? I got a built-in calculator here. We're going to use the Invest Nest. So this is 262, 273, 269, 264, average value 267. So we're a little bit below that, not much. My offer is going to be a whole lot lower than that. And I will break it down here in a minute. Property taxes seem pretty reasonable. They haven't made any changes since April, I guess May. Now, at the time of this recording, we are in June. Looks like we got a 285, a 245, and a 235 that have recently sold. Let's see what this one looks like. Definitely updated a bit more. And basement's unfinished as well. But this here is this here into the garage. It's kind of cool. All right. So certainly more updated, and that only sold for 235. Let's see what else we can find here. Let's see what this one looked like. It sold for 245 about a month ago. Definitely more updated date. Basement's unfinished as well. All right. Now I think we've pulled out everything we can from the comps. So based on these, I think our overall value is going to be about the ARV value is going to be 240. So we're already coming in a whole lot lower on that. I'm just taking some notes here. Or ARV, or after repair value, what we think it's going to be worth once it's completely cleaned up is going to be that 240. Now we're going to jump over to the Invest Nest and analyze the cash deal, which is why we needed to know our ARV, or after repair value. Got it pulled up here on the Invest Nest. I love this site. I'm a big fan of it, if you couldn't tell. I use it to analyze all my deals, especially on the cash side, to see kind of where the numbers fall, where they lie. One thing I love about this site is it does have skip tracing. Now we know that this agent's not doing much. I may want to hit the skip trace button, get all of the seller's information, and reach out to them directly. Assessed value, it's really just what it's taxed at. Mortgage, so they bought it in 13 for 117. Good for them. All right, let's run some numbers, shall we? We're going to call this just the property address. And our purchase price. So we said our ARV, or after repair value, is 240. I'm going to offer 70% of that minus the repairs that I think we're going to have to put into here. Oh, 240. 70% gives me a 168. All in, I think we could probably get this cleaned up for about 25,000, which gives us a offer price of 143. Our closing costs are going to be 4% because we're going to pay both sides, buyer and seller. Our lender is going to charge us 2 points, and that's really just how they get paid. We want to put in our $25,000 renovations, and I want to roll that into our loan. I plan on putting down 25%. We want a 30-year term, and rates are, we'll just stick with a solid 7%. Rental income, here we go. This is where I was getting ahead of myself. The two sites that I love to check for rental comps are Rentometer, just rentometer.com, link in the description below. And our average rent price for a 3-bedroom, 1.5 bathrooms within the last 12 months, within 2 miles of the property, a little over 1900, median 1950. Our upper end 21, lower end a little above 17. And the other site that I like to check is HUD or Section 8. And for a 3-bedroom, they're saying they will pay up to 1680. Based on these two numbers, I think we're going to go with this just lower 25 percentile, a little bit higher, but it's a very conservative way to run the numbers. So we'll go bump it a hair to 1750. 1750. I'm going to write that down as well. Property taxes look right. Insurance, I factor in $1,500 a year or $125 a month. Property managers, 10%. There is no HOA, and our tenant's paying for everything else. Reserve fund, I call it my war chest. That's 5% for repairs and maintenance, vacancy, and capital expenditures. CapEx, capital expenditures are going to be your big ticket stuff like a roof and HVAC. Really just kind of your expensive stuff. We'll plan on 2% appreciation rate, rent increase by 2.5%. Hold it for 10 years, and we are real estate investors. We don't pay full commissions. All right, let's see what these numbers look like. You were waiting to see if it cash flowed. I know. I have to ask just one more time. If you haven't done so already, hit that like button and share this with somebody who else might find some value in it. Cash flow positive. Not a great cash flow, but 130, 144, almost a little over $50,000 out of pocket. 42 of that is our down payment. And our monthly payment is $838.28. Based on all of these factors, cap rate or capitalization rate, I generally like to see this at purchase between a 6.2 and 8, so it's a hair high. DSCR, it's a little close. They like to see around a 1.2, but DSCR stands for debt service coverage ratio loan. And that really just means that they're not looking at your tax returns, your pay stubs, anything like that. They are focused solely on the production of the property. Cash on cash returns, a little over 3%. Return on investment, it's actually pretty good over the time we plan on holding it, which is about a little over 11%. 1% rule, if you follow that, it does work. And another thing I love about the Invest Nest, it breaks all of these figures down so I know where each dollar's going. It takes 10 years to get it to a good cash on cash return. But ultimately, to have all of our original capital back, it's going to take, we're looking at probably about 8 years, I think, to get out of, fully get out of that. But that's because the cash flow is pretty low. Now it's time to do my favorite part and analyze the creative deal. This is my creative calculator. You can get it off my website, christhompsonteam.com. Link also in the show notes. Link for everything that I've used today will be down in the show notes. With InvestNest, there will be a code in there, and if you or code and a link, and if you use that, you get 50% off your first month and your first week for free. So our ARV we said was going to be 240, and what's ARV? After repair value. Our purchase price or offer price on the cash side was, where was that at? 143. So on this creative, because we're asking the seller to be our bank here, let's say try 200. and we're going to offer them a 4% interest rate. And now our PITI, principal, interest, taxes, and insurance, our mortgage payment. For that, we're going to jump over to Bankrate. We said our offer price was going to be 200,000. I only want to put down 5%. And we said we're going to offer a 4% rate. Our property tax is $218 a month. And insurance, 25. All right. Our PITI, or principal, interest, taxes, and insurance, come out to $1,250 a month. $1,250 a month. Our potential rents, we said were $1,750. And remember, that's on the low side. Eesh, even less of a net cash flow deal. So that's a $500 gross and $262.50 to the port chest, $175 to the manager, and only $62.50 into our pocket. Okay. All right, our cash to the seller was that 5% down, which is 10,000. This agent's not doing anything. Let's see if we can't throw $500 to make him go away. Assignment fee, we are not working with a wholesaler, so we're going to exempt that. Closing cost is that same 4% that we used on the cash deal. Cost of renos, we said we're going to be 25,000. 2 months of holding is just 2 months of this mortgage payment here. No arrears that we're aware of, and a good TC or transaction coordinator will cost you about $1,500 a month. So for a large chunk of change out of your pocket, almost 50 grand, which is pretty similar to what the cash deal was saying, you can make $62 a month. Now, if you can manage this yourself, and if you can get a higher rent price, then it might actually be a good deal. So check with a local and make sure your numbers are accurate. Don't just trust me. Always verify your numbers. And there you have it. There's our property in Omaha, Nebraska. What did you think? Cash deal, creative deal, or find a different property? Thanks for tuning in this week here to the weekly deal analysis here in the Corner Barn. I am Chris Thompson, that bearded guy, creative guy. We will catch you next week.